Hey guys, sorry for the delay. I apologize. How's everybody doing today? Let's see who's on. All right, cool. We're ready to rock and roll. Sorry about the delay, guys. I actually just finished up a closing here. All right, so we're gonna go get ahead and get started. So today's seminar is how to add $50,000 of income to your bottom line in the next 9 months with alternate financing. Back in 2017, I went all in on all these different types of loans other than residential mortgages because I saw a need for it in the marketplace. And my clients didn't know exactly where to go as far as, again, non-QM financing, commercial mortgages, hard money, fix and flip, and bridge loans. I believe that these types of financing are very, very, very valuable, especially in where we're heading in this market right now, in order to cultivate relationships and build your book of business. So we're going to go ahead and get started. And the first topic we're going to talk about are commercial mortgages. Now, people hear, oh, commercial mortgages, what are they? I don't know anything about them. That's fine. We're going to go over certain asset classes where commercial mortgages are best utilized. So on this picture here, you see a mixed use property. So if you look at property, there's one rental unit above a commercial storefront, and then another rental unit above the second residential rental unit. So a mixed use property that incorporates commercial with residential is the best commercial mortgage opportunity for someone like yourself, because if you're watching this video, you're probably in the residential mortgage space and you don't know when your clients are going to go from having 2 to 4 family investment properties and get into the next level real estate investing. So you need to know how these properties are actually able to obtain financing. These particular properties are usually financed by local commercial banks, okay, which are inside of your community, they're credit unions, and they usually lend up to 80% loan to value. It all depends on what the rental income is and whether the property is going to be owner occupied, where the owner occupies the commercial space on the bottom, or if they rent it out, it will be dependent on what's called the DSCR, or debt service coverage ratio. So again, it's very important to understand what the rental income being brought in is, as well as what the expenses are. Another very common asset for commercial lending is restaurants. Now you have to look at it as, again, is somebody opening up a restaurant and buying the building, or is somebody looking to buy the building that a restaurant is in and then have the restaurant pay rent as a tenant? Again, you have to figure out, is it solely an investment or is it an owner occupied true business venture? And either way, financing can be obtained by this, but you need to make sure when you're presenting the deal to a bank, you know what those numbers look like. Here's also a very, very, very hot product for the market, which is a multifamily rental building. So it looks like this building has maybe 9, 10, or 11, 12 rental units. Commercial banks love putting money out and lending against multifamily residential properties. Multifamily residential properties are very desired in this market, and banks love lending, again, up to 80% on acquisition of a property like this. In order to qualify the loan, you need to figure out, again, what the rental income is and what the expenses are, and then we'll back into what the actual loan amount is qualified for. All commercial mortgages come in 3-year, 5-year, 7-year, and 10-year loans, but they're amortized over 20 years, 25 years, or 30-year amortizations. So there's no 30-year fixed mortgage rate for a property like this. Typically, again, a 5-year fixed rate or a 7-year fixed rate is going to be the most common loan on a property with a multifamily component. Here's an example of a property we did. And while we did this loan as a true bridge loan, there were multiple reasons why. So as we get into this presentation, I'm going to be able to explain to you what the strategy is behind this. So our client purchased this property all cash and then ended up renovating over budget. He then came to me and said, I want to get a commercial mortgage on this, but his business was a startup business and did not have proper financials in order to qualify for a business loan. So we went and gave him a $500,000 bridge loan for 6 months. And now we're in the process of doing a commercial mortgage to refinance the bridge loan out and give our client back his money. He now has the proper track record of showing what his income is coming in from the business, that he's able to make monthly mortgage payment. So by showing he's made 6 mortgage payments at a higher rate, a bank will now take this property and deem him very healthy risk. All right. So even though it's commercial property, I was able to double up on a deal where we did a bridge loan, and now we're doing what's called the commercial mortgage exit refinance. So by knowing how all of these loans work together, not only are you able to create business for yourself and service your clients, you're able to properly navigate your clients down the financing path where you know all avenues of lending so you can set them up for success. In some cases, people put clients into bridge loans that they can't ever get refinanced out of. So in this case, if our client's paying a 10% or 12% interest rate, which is what bridge rates and hard money rates go for, you don't want to keep that loan for an extended period of time. You want to use that loan to bridge today's scenario into tomorrow's strategy, and always make sure you have the exit strategy of a commercial mortgage as your backup option. Commercial loans also consist of construction, ground up construction financing. So you could have a commercial construction loan or a commercial ground up development site loan, which are very common. Not a lot of banks do them in this market. It's very important to know where you go to, to have these loans facilitated. But it's very great to have these products because in some cases you're able to do a bridge loan to help people get their project up off the ground, break ground, the plan for approvals, permits, and everything else, kind of recoup some money that they spent on acquiring the land or going through the legal process. And then you'll be able to do a commercial construction loan after you do a bridge loan, right? So kind of commingling all these loans together help your clients either access capital, access equity, pay off existing debt, or be able to complete their project A to Z. A lot of things in this market go wrong or don't go as planned. Timing is obviously an issue. Supplies getting here properly in a certain time frame are an issue. The cost of products increasing are an issue. So things happen, and the more you know about all different types of financing, the more you'll be able to help your clients get in the position that they need to be in. Fix and flip loans. I've never been a big component of fix and flip loans to the masses. Yes, I've done them. Yes, I've brokered them, but a lot of people are going out there doing crazy fix and flip loan products. While I personally do offer them, I only offer them to people that come back or past clients, repeat business. It's a very competitive market and there's a lot that goes wrong usually. And I think that knowing about them is actually more valuable than doing them because everyone comes out and says they do fix and flip loans, but they are unable to deliver in most cases. So understanding what institutional lenders or direct lenders in this market offer and how their products work, going and offering them to your clients as just an option can make you get business, elsewhere from other types of financing that they need. An example of what you can do is potentially help a client do a fix and flip loan. And then rather than flipping the property, once they're done renovating it, you can refinance them into a regular or a non-QM mortgage. And now you help them obtain the fix and flip financing. And then you created, another mortgage for yourself to now have this client keep this property in their portfolio if the numbers make sense. So again, a lot of people are pushing this product right now. This falls in kind of in the non-QM space where most of these loans are backed by Wall Street. So as soon as Wall Street kind of deems these loans more risky or starts to see defaults, you can see the loan parameters change on these literally overnight. So I wouldn't recommend a ton of exposure in this loan type. But what I would recommend is understanding what the process is, what the loan products are, and who are the best lenders to go to. If anybody's interested, feel free to reach out directly to me. I could place you with some lenders. And again, it's a great way to earn off your business should you be interested in doing that. Now, non-QM loans, there's a lot of unknown in the market right now. Word on the street is that a lot of these non-QM lenders are dropping off and a lot of hedge funds are stopping buying this paper or this debt. It's something to watch in the marketplace, but I can tell you that non-QM loans are a great avenue of earning off of these types of products. Not a lot of banks offer them, not a lot of brokers offer them. So the more you know about non-QM loans, the better off you'll be. Inside of non-QM loans come what are called short-term rental loans, which are great for people that want to buy Airbnb properties or Verbo properties and do short-term rentals. The qualifications are much less. You don't have to prove your income necessarily based on your credit score, the money in the bank, and the overall asset. So as you can see, a lot of people Airbnb their properties these days. It's tough getting a regular conventional mortgage on them without having a track record of rental income. These lenders actually lend to people that want to invest in Airbnb or short-term rentals. The rates are a little bit higher than normal, but again, it gives the client an option to have if they want to go down this route. In a particular example here, one person can own all 5 of these properties and put 20% down on all 5 of them, own all 5 of them, never supply any type of tax return, and buy all 5 of these as an investment property. Well, if you were doing these loans conventionally, and let's say all 5 of these properties were vacant, you would have to show a lot of personal income to be able to qualify for these types of loans. So having this option in this market where everyone wants to be an entrepreneur, everyone wants to be a real estate investor, everyone wants to expand their portfolio, it's super crucial to understand what products are available in this market, because your colleagues are not taking the time to learn about these products. So if you know about these products, you're actually going to be getting business from your colleagues because you know how to do these loans and help facilitate an additional service to your clients. Here's an example. The clients inherited this property. They didn't show any income on paper. This is actually a legal 2-family house down in Red Bank, New Jersey. And we were able to give them a new mortgage of $540,000, which was 75% of the home appraised value. We closed the deal in about 2 weeks. And again, the clients had no income on paper. They had a great credit score. They had no money in the bank. And we gave them a pretty nice chunk of change in their pocket. And they were super happy because they're making about $8,000 per month in rental income. So once you pay your mortgage, they were netting about $3,000 or $4,000 a month after it was all said and done. And we just created not only a one lump sum, cash replenishment of what their investment was into the property, but also now they're making this residual income because we were able to help facilitate this transaction for them. They used the money to pay off credit card debt and reimburse the other people that inherited the property as well to buy them out. So really understanding strategy and seeing what the best alternative financing option is for your client is going to help you become more valuable and help you become a true real estate financing expert. Hard money. There's a lot of unknowns about hard money in the marketplace. However, true hard money is when you have money in a bank account from a high net worth individual or pooled capital, and someone actually lends you their own money. That's what true hard money is. Hard money isn't fix and flip money. Hard money isn't non-QM money. Hard money is not necessarily bridge money. Hard money is me taking my hard capital or money in the bank and lending it. Usually these rates are anywhere from 9 to 12%. Now, there's also institutional capital, which is also deemed hard money, if you will. Basically, someone lends you hard money, and then they go and they take that debt and they leverage their debt with institutional capital to increase their return on investment. It's very complex, very complicated. If anybody has any questions, I can further explain that on a one-off section. But what you have to understand is hard money is really for people that don't qualify for commercial financing, non-QM financing, or need money immediately. About 2 weeks ago, I closed the deal in 19 hours for $40,000 on a piece of land in Philadelphia. The client was jammed up, had to pay his current hard money lender an extension fee, or the hard money lender was going to take his properties. So I chose to do a hard money loan of $40,000 to advance my client that fee that he had to pay somebody else. That's true hard money. It's not heavily regulated. It's more of, person to person interaction, and helps people access capital almost immediately without any real true underwriting guidelines. Here's an example of another deal I did last year. Re-Verifinancing, my fund lent a client $45,000 as a second mortgage on their investment property in Connecticut. As you can see, they had a 545 credit score. I gave them a second mortgage on this investment property in order to take their primary residence out of foreclosure. I didn't care that they were in foreclosure. They got caught up in the whole loan modification, forbearance, deferral with their bank. The bank was calling their mortgage due. So in order to help them out, I gave them a $45,000 second mortgage on this income producing property. And they used those funds to pay their current mortgage current, take them out of delinquency. So you can use hard money to be very creative and really truly help people. Again, hard money is not something you want to be in for a long period of time. Typically, these loans last from 30 days to 18 months. And they're only for investment properties. So you might ask, well, why didn't you do a mortgage on the primary residence? Because then TRID, Dodd-Frank, RESPA, all those, lovely governing bodies, come into effect. So when you lend hard money on investment property, it becomes a commercial business transaction, and it takes a lot of the governance and regulation out of the equation. Bridge loans get people from point A to point C. So B for bridge is kind of why I put that in there. Bridge loans are used for many different purposes, but primarily to bridge a gap from where you are today to where you need to be and get immediate, quick financing. Maybe the property has violations, or maybe the property is vacant, or maybe the property has other issues, or maybe you just have to close quickly. Maybe your credit score dropped, whatever the case may be. Maybe the bank denied your loan last minute and you still need to close on a property. A bridge loan is a great option for you to offer your clients in the event that something goes wrong with another bank. Here's an example of a bridge loan I did. I did this as a bridge construction loan. The client owns the two properties to the left, the one boarded up, and then the smaller one to the right, if you look at it on the screen. And we did a $70,000 bridge loan on the property to the left that is boarded up. We did a 6-month loan. The client had a sub 600 credit score, had 14 judgments, property was vacant. So I gave him enough money to not only roll in 6 months of payments, I paid off all 14 of his judgments, and I actually helped him get his credit score up from, I think it was like 585 to 642 in a matter of 30 days. So I used this bridge loan in order to help people, in order to help this client get to be bankable and be able to get an actual construction loan. The fact that he owns the property next door to the right also helps out because that property is rented out. So that property, which has no mortgage on it, is a future non-QM refinance as well. So in this particular client's deal, this could be 4 or 5 deals in a matter of 12 to 18 months. So I used the bridge loan to help him get to where he needed to be in order to open up other financing options for his real estate portfolio. HELOC, home equity line of credit. I'm a big fan of these right now. A lot of people want to access their equity in their homes, as we spoke about on last week's Zoom at noon. Most loan officers do not ever offer their clients home equity line of credits. Most loan officers do not know about home equity line of credits. Again, as we spoke about last week, you could legally charge a consulting fee on these. I just had a client close today on the HELOC that I sent to one of my banks. They said it was the most easy, seamless process. And then simultaneously today, I had my very great new client. I'm actually sitting in the bank where I closed the deal at. We just closed a $1.8 million equity line of credit, a blanket mortgage across six of his properties. It's great because he doesn't want to pay interest on all this money of having in his bank account, but he now has access to $1.8 million. He was getting outbid and out offered on all these properties because he wasn't going in all cash. So now we gave him the accessibility to have access to $1.8 million literally at his fingertips. Whenever he wants to make an offer, he's able to show proof of funds liquid of $1.8 million. It's a very, very, very great product to have in this marketplace. People need to utilize these loans more, and you need to be able to also educate your clients on why it's best to have an equity line of credit rather than doing a true cash out refinance and having a larger mortgage payment. So I think that the more you understand all types of loans in the marketplace, the more valuable you'll be. And also you'll be able to see that, more clients are going to gravitate towards you as you offer more of a one-stop shop for all types of financing. There's no debt to income ratio on commercial lending or non-QM lending or bridge lending or hard money lending. What people look for in the underwriting process is called the DSCR, or the debt service ratio. This is kind of like a debt to income ratio, but you have to basically weigh out what your true NOI is, or net operating income, and see if that supports paying the debt back. There's a certain equation for each bank and each lender that has a certain requirement for. Again, we can get into that in the off topic and go over a true underwriting process of what that looks like. For commercial and hard money and everything, you basically want to take the income, subtract the expenses, and get the operating income. The net operating income is really the key component in getting any of these types of loans at a very, very attractive loan term. So a lot of loan officers leave a lot of money on the table. I have hard money lenders that refer me residential loans. I have residential loan officers that refer me non-QM loans. I have non-QM loan officers that refer me commercial loans. I have all these different types of mortgage people refer me all different types of loans because they don't know how to do them. And they leave money on the table. I personally left money on the table for the first 10 years of my career because I was so busy doing residential loans that I never had the time to learn or understand the other lending products in the marketplace. So while I believe you should ease into learning all these different types of loans, learn them at your discretion. I'm happy to train each and every one of you, give you guys insight on how these loans operate and who your best options are in the marketplace to get these loans done. So if anybody has any questions, we'll feel free to open them up now to anybody that's interested. But the main purpose of today is, don't leave money on the table. As loans become more scarce in the marketplace, you need to offer more loan products so people can access money and use you for all different types of loans to finance their real estate. Last point, open your LLC now, today. Google whatever state you're in, open LLC in New Jersey. Get your LLC opened if you don't have it already, and try and start earning immediately, because these types of loans will keep you in business regardless of what's going on in the market, regardless of what's going on with interest rates. People always need to buy real estate and obtain financing. So we're going to open this up now for questions. Tanya, Sarah, Sherry, Renita, does anybody have any questions as far as anything we spoke about today goes?
Yeah, I got one. Thanks for presenting.
Wow.
I'm sorry. Don't all speak at once. Sarah, you want to go first?
Okay. So obviously it's all under the umbrella of like real estate lending, whether it be commercial or whether it be, sorry if you hear a lawnmower, I'm like sitting in my car outside of my work.
All good.
Do you do any other type of like personal financing? Because I work for Loan Depot.
I personally don't. That's more of a bank that you would go to directly.
Okay.
I try my best to stick to true real estate financing. Again, have I facilitated, private loans or like SBA loans or business loans? Yes. But what I've come to find is most people don't qualify for them, right? So unless a loan is like over $1 million, for example, and like the business is in existence and they have true business tax returns that support that, I'm not going to spend my time on that, because again, I think the most important thing is becoming a true real estate finance expert and understanding how financing for all of real estate works. Again, just for an example, I'm laying in bed last night, I've been battling the flu for 5 days now at 102 fever, and my phone's been ringing nonstop. I couldn't really even hear or speak up until, thank God, this morning. I got a text last night from a realtor whose brother is buying a $6.8 million warehouse in LA. And as soon as I got that text message, hey, my brother's buying a $6.8 million warehouse, needs financing. It was funny. Like I immediately felt better, right? My flu got knocked out instantly by that. But it's like, it gives you the opportunity to be the expert, where everyone has a residential mortgage expert. No one has an expert that does everything. And I think, you do a much better service of being an expert on one craft rather than understanding how like personal loans work, because those change and those are very heavily regulated by the government.
Okay.
Does that make sense?
Yeah, it makes sense.
Does anybody else have any questions as far as commercial or non-QM or hard money or bridge loans go?
So you said that you have to open an LLC. So in order to be able to do commercial, you have to have an LLC set up? So
in order to, look, you don't have to, right? Like if you're like, let's say you send me a deal, I could legally pay you on a 1099, right? But from like a level of professional standpoint, like if you had, I'm just giving an example, Sherry's Commercial Lending LLC, right? And you have that, you're getting paid as an entity, and there's tax benefits for having that as well, rather than getting a true 1099. Like for Rivera Financing, for example, I purposely have that to build a company, build a brand, and build sub brands under that of different types of loans. And if you have an LLC, you're able to partner with some fix and flip lenders or non-QM lenders where you don't need licensing, and they can legally share in the fee with you because it's a business to business transaction. So in order to not shortchange yourself on your earning capabilities, it's highly recommended that you have an LLC set up. That's my personal, preference, if you will. Again, you don't have to do it, but if you know you have an LLC set up, it protects you from a liability standpoint. If something goes wrong or you get sued, also it allows you to earn a little bit more. So that's why it is encouraged on my end. Does anybody have any other questions? Tanya, Renita, do you guys have any questions?
I just wanted to say thanks, Jeff. I'm working with a lender that does all of this, and it's been my first year, so I've been exposed to almost everything but hard money loans. It's in the first year so far, so my head was spinning a little bit. It's nice just to hear you, talk always. So I just wanted to say thanks.
I appreciate that, Tanya. You're welcome. And look, like I said, I truly believe that in this business, in this market, you want to stand out. And I think one of the easiest ways to stand out is by at least offering that you have access to all of these services or types of loans, right? You don't have to be the expert yet. You don't have to know everything yet. But the more you're able to show that you offer when your competition doesn't, immediately gives you a better opportunity to get your phone to ring, right? I guarantee if each one of you posts right now, hey, we're now offering commercial financing and non-QM financing, your phone's going to ring because not everyone's offering that. So people know you for what you do. And if they only think of you as a residential mortgage person, meanwhile, they're looking to do a $20 million brand new townhome development site because they're a builder and you did their personal residence, wouldn't you want action on that $20 million potential loan or potential deal? People don't think of that way. So I've positioned myself over the past 5 years where if you're looking for any type of real estate financing, call me first. If I can't do it, I could refer you to somebody who can do it. But again, 99 out of 100 times, I either do it directly or have the ability to arrange that financing. So I think it makes you more valuable, especially as, like I said earlier, deals become more scarce. And plus, you're becoming an expert in the financing world for real estate. I think that's what everyone's goal should be. It shouldn't be a part-time thing. It should be a full-time, let me learn how money works for real estate.
Yeah, I think it goes back to what you're saying too about establishing yourself as an expert, in your social media and everything, your marketing that you do. So people are like, oh, yeah, she knows, I'll call her.
Bingo. And it makes you getting residential mortgage business that much easier because everyone has a residential mortgage, right? So if you do someone's commercial loan or investment property loan, like they probably have primary residence, right? So it's a great way to earn business without going out there and saying the same, sales pitch as everyone else. Hey, we have great rates. Okay, but I also do every other type of loan in the marketplace. So let me do all of your types of financing rather than just, hey, sorry, I only do this. Does that make sense?
Yeah, it does. And I didn't hear you mention much about in the HELOCs. My broker that I've worked for the past year has used those a lot to get people into houses and that maybe they didn't have the 20% down for and
Sure.
things like that. And so that's been a really useful tool for us in getting some deals done in the first place that they wouldn't have normally been able to do without, doing a piggyback HELOC and whatnot.
Bingo. So people have, 2.5%, 3%, 3.5% on their 30-year fixed mortgage, and they have $500,000 of equity in their home. They don't want to refinance to lose that great rate, but they don't have enough money to put on a down payment on a new property. So
Exactly.
you do a home equity line of credit to access those funds, and then you use those funds to use as a down payment of 20% on your new property, right? So like, Tanya, just having that creativity alone will separate you from the rest of the pack.
Yeah, I'm learning. Thank you, though.
Keep
Thank
going.
you again. I appreciate everything you share.
Hey, you're welcome. My pleasure. Renita, do you have any questions?
I do have a question. I'm a new mortgage loan officer, and I'm with a broker. But he told me that we don't do commercial. So is there a different licensing for that, or is that just his preference?
Let me tell you a funny story. I've shared this in the past. In 2015, I went to the CFO of my bank who makes like $75,000 a year, whatever it was, right? And I said, hey, look, I just closed this commercial deal. I made like $5,000. Oh, that's stupid. Go out and get more residential mortgages. I'm like, what? He's like, just that's a waste of time. You're never going to make money in that. You're never going to make money in that. Right. So what did I do? I went out, opened up my own entity. And the following year on my own, I made like $130,000 just doing commercial mortgages. Right. I almost doubled up his income that he's been making for 20 years. Right. So residential people only want you to go out and focus on what they're doing because that's what they earn off of. They want you to bring more business to them. It doesn't make you more valuable. It actually hurts you because now you're boxing yourself in, right? So you don't need licensing to be able to arrange financing. You need licensing to broker financing where the bank is paying you a fee. If you have an actual consulting fee agreement with your client, you do not need full licensing, no licensing at all, which is why I recommend opening up an LLC so you can begin offering these financing options directly to your clients yourself.
Okay, I think I understand that.
I hope I've said that as clear as possible. Basically, most residential people just stay in their lane and they don't know other financing because all they've ever done is residential financing, and they don't
Mhm.
realize how much money they're actually leaving on the table by not offering all different types of financing.
Okay, but if I work under a broker, and you said I wouldn't be able to do the financing, but I can arrange it.
It's more of a technicality, right? So like, let's say you opened up Landers Lending LLC. I actually like that. It kind of has a ring to it. Landers Lending LLC. I think you should open that up.
Right.
So you opened up Landers Lending LLC, and that's crazy. It's actually LLC, Landers Lending LLC, LLC. You get it? LLC twice.
Right.
If you did that, then you would have the opportunity of getting partnered up with some non-QM lenders and some fix and flip lenders where you could actually have an agreement with them where you don't need any licensing, and every deal you send them, they give you a fee share. You could do that completely outside of the brokerage you work for. There's no licensing involved. It's paid out as a fee share, consulting fee. So like anybody who's not doing that is just costing themselves the potential of earning. And I don't know why anybody would want to do that.
So who does the deal then if I don't do it?
So all you do is you would refer the client that has that need directly to the lender. And then if and when that deal closes, they pay you a fee.
Oh, and I can get paid the fee because I'm licensed?
There's no licensing required. No, you'd have an LLC. So they would basically pay you a legal referral fee for referring them the deal.
Oh, okay, a referral fee.
Correct.
Hmm.
So let's say you
another
had
question.
somebody, let's say you had somebody that wanted to fix and flip a property, for example, right? You're like, I don't know where to go. Contact me. I'll plug you in with one of my people that shares in their fee. They'll do the deal. If and when that deal closes, they'll pay your LLC a referral fee.
Okay.
Sarah, you had a question?
Yeah. So, I mean, how did you, if you were in residential mortgages for the first 5 to 10 years, then how in the world did you break into commercial? Because I'm like over here in a direct call center and I'm even like kind of nervous how in the heck I'm even gonna like self-gen my own business from realtors. So like that's like a whole other enchilada.
So you're right. By the way, if anyone ever wants to send me a present, my favorite food are chicken enchiladas with green sauce. So like I totally love enchiladas. But to answer your question, so here's what happened. So as you probably can imagine, I have and still had a ton of energy. And I love meeting people. So I would go out there and literally meet everybody. And even as early as 2009, people would call me, hey, can you finance my mixed use property? I'm like, I can't. And I found this guy who I took a very strong liking to. And I sent him all my business from 2009 through 2015. And he would pay me a 10% referral fee, right? So if I gave him a deal, he made 10 grand, he'd send me $1,000 just for passing the name, right? And you have to also understand that when I got into the business, like 2007, 2008, the mortgage market was changing by the day. It was like, the whole world collapsed, right? And then in 2012, when Dodd-Frank came about, the whole mortgage business got rewritten. So I spent a majority of my time fully engulfed in getting mortgage loans and then tracking and following guidelines to stay abreast of what's going on so I can close my deals, right? So I didn't have the physical man hours, physical time to learn any other type of business. Plus, nobody knew it and nobody wanted to share it, right? So when I felt like I mastered residential mortgages, again, I really mastered them early on, but remastered them when Dodd-Frank came about. By 2015, I kind of became bored and started seeing like I needed more. Like a mortgage is a mortgage, right? So I'm like, okay, let me teach myself other parts of financing, commercial mortgages, bridge money, hard money, because there are a lot of big deals going on. I'm in the New York City marketplace. So like the average bridge loan in New York City is like $5 million. You got to do like 15 mortgages. Well, I do at least to like close $5 million of business. I'm like, well, if I close one $5 million deal extra per year, man, that's awesome. That's where I came up with that like $50,000, right? If you can close one $5 million deal, you can make 50 grand on one deal. It's crazy, right? So I took the time and I left residential mortgage lending in 2000, really at the end of 2017. So for 18, 19, 20, and 21, I've spent the last 4 years meeting the right bankers, meeting the right hedge funds, meeting the right hard money lenders, meeting the right bridge lenders, opening up my own hard money bridge lending fund. I did all of it on my own, but I taught myself it, self-taught, by meeting the right people, learning, losing deals, losing money, because I was like, wow, if I just made, I'm giving an example, $40,000 this year for making 10% of the fee, that means I just made this guy $360,000 on referrals I sent him. I'm leaving a lot of money on the table. So I also saw the residential mortgage business become unfun and ultra rate competitive, where like you really couldn't make a lot of money and do a lot of business anymore. It just wasn't that game anymore. So I decided to hedge against any type of market downturn or any type of craziness that went on, because I saw an opportunity of an underserviced market. So to answer your question, all my business, 100% of my business has been self-sourced, self-generated since the day I started. I never took a lead, never bought a lead, never spent a penny on outside marketing in my life. So the business is easy because nobody does it, nobody services it. And bankers or hedge funds, they don't want to deal directly with the consumer. So I found a really nice sweet spot for myself in this business, because there's people that need service that can't get service. So it's been a painful couple years, right? Like learning through the bumps and bruises and changing in the market. But again, I'm literally sitting here right now today, having just closed a deal for a client that everyone and their mother told me that there's no way I could do an equity line of credit on an investment property, let alone a $1.8 million equity line of credit as a blanket mortgage across 6 properties, right? So again, being able to just market the ability that I just closed this deal that's unheard of, that will get me $100 million of business like this, because there's a lot of other people that are in this space that need this loan product and they don't know where to go. They don't know the banks that do these. And quite frankly, they don't know how to present themselves to the bank to make it look attractive for them. So while I'm a big believer in self-teaching, I also believe that, early on, you shouldn't just go from A to B. You should have a real transition and have a coach or an expert show you the ways. So not only do you not cost yourself money, you don't cost your client or consumer a potential transaction. Does that answer your question, Sarah?
Yeah, no, it definitely does. So you've never really had your phone ringing. You've always kind of been the one that is out there bringing your own business, and you just made the right connections.
So yeah, I don't know if you heard me ever past, like at one point I had 6 phones. I had like a 908 number, a 201 number, a 914 number, a 551 number, a 917 number, and a 212 number. And I would give myself a challenge of, okay, I'm going to go into Manhattan with this brand new phone number. I need to make my phone ring. Like, it's always easy if you have the same phone number since you're 20 years old, for example. Everyone has your number. You're always busy, busy, busy. Well, if you really want to challenge yourself, get a brand new phone number, put it on your business card, go out there into a market, and your goal is to make that phone ring. Because if that phone rings, that's money calling. And I gave myself that challenge of, this is how I kind of cultivate, where my return is coming from. Again, if everyone's always calling your phone, they've had the same phone number, yeah, your phone's always going to be ringing. So your goal is to make your phone ring, because every time your phone rings, it's money calling. That's at least how I look at it.
Well, congrats on your deal today.
Oh, I appreciate it. The guys were awesome, like totally great. And it's funny, he's like, I'm going to buy 5 more properties in the next 6 months, and you got all my loans moving forward. He's like, I'm going to make you a lot of money. I did not think that this loan product even existed, and again, like, being fully transparent with you, this is 100% fact. It was a $1.8 million loan. He was happy to pay me 75 basis points, which is $13,500. He paid me directly and was happy to do it. and is gonna send me all of his business moving forward, right? So
It's
like,
insane.
you follow where I'm coming from? So like, who would not want to offer that, right? Like I just helped this guy, gave him exactly what he wanted. I made phenomenal money on this deal, and we both walked away from the deal winning. And now he has exactly what he wants.
Mhm.
You know?
That's awesome.
So I share that with you because like I'm not special. I've just taken the time to learn the business the right way and just keep going and keep going and keep pushing through without any type of fear. And I always go out there and try my best to do right by people and make sure it's a win-win for everybody. Does anybody else have any questions? Renita, is this your first time on the call today?
Yep, it is.
What'd you think so far?
Won't be my last. Where are you?
I'm currently sitting in some part of New Jersey. I'm based out of New Jersey and New York City.
Oh, okay. I'm in
Where are you
Ohio.
based out of?
Ohio.
Very nice. So Ohio is a different market, but I hear it's a very hot market. I also hear that the commercial and office building market there is a very strong market right now. So I think, getting into this space is a very good move for you if you play your cards right.
Yeah, I'm just, like I said, I'm brand new. Like I was just finishing up the learning and stuff like that for the test. And you're making me think about where it says like you can't take referral fees. So I'm a little confused. But I don't know. I was gonna just message you on the side about it because I'm totally new. I mean, I worked in foreclosure for 9 years, but I'm new to this whole mortgage side of things. I'm a loan closer, so I'm a notary. I go close loans and refinances, and it gave me the drive to want to do the mortgage loan officing part because I see who makes money.
Yeah, but again, so don't be fooled by that money. Like a lot of people like have come to me like, oh, you make it look easy, you make it look easy. I'm like, again, don't forget, I started when I was 20 years old. I'm 35 now. I've been doing this for 15 years, and I started in the New York City marketplace, right? So not to like downplay Ohio, right? Business is the business anywhere, but like New York City is a kill market, right? There's a bank at every corner, right? It's a whole different world being inside the 5 boroughs in New York City and being in the suburbs in New Jersey. Like it's a completely different world, let alone being in Ohio or somewhere else, right? So don't be fooled by who's making money. You don't know what it took to get there. But what I will tell you is if you start at the ground level, which it sounds like you already have experience, and you have patience, and you do right by your clients, and you show them a level of sophistication and professionalism that most other people don't show, you'll build your book of business. But I tell everyone this, like my first full year in the business, I think I made like $36,000. My second year in the business, which I was only in the business for 6 months because I walked away from the business after that for 6 months to go back and play college football, I made $118,000. Then when I came back into the business after getting hurt again, I made $180,000, right? So I went from 36,000 to 118 to 180. And in my 4th year in the business, I made over $500,000 at 24 years old on a W-2, closed $31 million in self-generated business, again, at age 24, right? So like, it's going to take you years to build up that income level. But if you have patience and you do it the right way, by year 5, you should be rocking and rolling. You should have a pretty big book of business.
Yeah, I know it's going to take time. I definitely know that. I know it's going to take some build up. I'm starting at ground level. So, yeah.
And this is why I think like learning all these different types of lending day one early on, I believe every single person that does lending should learn all this day one, right? It's like, hey, we're going to teach you how to run, but we're not going to teach you how to run and jump. You know what I'm saying? Like those go hand in hand. Like what if you're running and then there's like a rock on the road? If they don't teach you how to jump, you're going to fall on your face, right? So with lending, all different forms of lending should be taught day one. So then that way everybody is able to be somewhat knowledgeable in all different spaces.
Yeah, I was wondering if I should just master residential first and then like visit this, but you said learn it all. Because where do you learn commercial lending from? My fiance two guys who are very prominent here in commercial lending, and he was gonna say, he said they'll mentor you because he's real good friends with them. But then, like I said, my broker said, well, we do everything. I asked him what states, and he said we do everything but commercial. And I'm like, oh well, I guess I can't have them mentor me because we don't do commercial.
Yeah, and again, so like I'm obviously a little bit different animal than most people. I believe in growth, both personally and professionally. So anybody that kind of puts a ceiling on me, I never really got along with, right? And I think again, like management and leadership is lacking inside the mortgage space, especially the residential mortgage space, right? Especially with the fact that a lot of people made a lot of money in the past 2 years, and everyone thinks they're a leader when they're not necessarily. Look, your beliefs are going to carry you to the levels of which you want to go. Just because you work as a residential mortgage broker for a broker, whatever that case may be, does not mean that your capabilities have to stop there. He can't legally tell you you can't do other forms of lending. He just can't.
Okay.
So I would recommend you going back and
something-
watching all the prior Zoom at Noons that we've done, so you can kind of like learn more about me and kind of hear what I have to say in different realms. I try and be that virtual management or leadership figure inside of this industry. Again, like nobody works for me, right? I kind of just tell you the truth based on how I've built my business and career, and I think I'm doing it the right way.
Okay, I'm definitely gonna go back and watch some more of your videos. I already subscribed to your. Are they all? On your
Thank
YouTube?
you so much. I appreciate that.
Are they all on your YouTube? No problem. Thank you.
They're all on the YouTube. All the past episodes, correct? Yep.
Okay.
Yep.
I'll
And again, like what I would tell you is, everyone is doing residential mortgages these days. Not everyone's doing these types of loans here. So even if you,
I want to do it all. I mean, I'm like a know it all. I want to do it all. Any opportunity that I can have. I just was under the impression that we were not allowed to. So I was confused when I was listening to you talk. I was about to hang up, like, oh, I can't do commercial anyway. So I said, well, let me just listen because I just like to know stuff. And so I ended up asking you about it.
I mean, I challenge everybody that watches this video. Like, I guarantee you, if you just follow my lead, by year end, you can make at least $50,000 by offering these types of loans. And it's not very hard to get there. That's like 5 or 10 deals that you can close to hit that number, right? But forget about the $50,000. If you learn, you become more valuable. If you become more valuable, you become more known in your marketplace as the expert, which then gives you other ancillary opportunities to succeed.
Right. So if we do that, like what you said, LLC, I was about the LLC yesterday, and then I was like, well, let me wait. But so if you do LLC and then you do it the way you're saying, is that something that I wouldn't tell my broker, or it's just he can't do anything about it? Doesn't matter.
I mean, I'm just being honest, like out of respect, like if he told you, hey, you can't do this, go back to him and ask why, right? Like hear what he has to say. And it's probably because he doesn't know how to do it, and it's not like you're doing it through his company. You're doing it through your own company. He can't tell you that you can or can't have your own company. You're an independent, even though you're a W-2 employee, if you close deals, you're an independent contractor, right? Like there's no conflict of interest. You're not offering residential mortgages. If he said, hey, we don't do this, even more the reason for you to open it up, because now you can go tell all your colleagues, hey, I'm doing this, and have them give you the deals that you're sitting next to,
Okay. I see now. All right.
I had a guy that does literally $3 billion in residential mortgage loans just send me a deal today, because he doesn't know how to do the deal that I know how to do. You follow me? So
do you teach these deals, or
say that again?
You teach these deals, or how do we learn how to do them?
So
I've
been thinking about doing like a mastermind for these types of deals where people pay, because again, obviously, like I do these free calls, for like 2 hours every week, which is fine. But again, like there's a lot of time and energy and effort that goes into them, so I've been kicking back and forth the idea. If you have any ideas or have any questions, I'm happy to maybe have a quick call to kind of point in the right direction, or we can do another Zoom at noon about a specific type of lending. Maybe we just do one episode on commercial lending, and I can walk people through how to go about that. But again, I can't condense 15 years of experience, let alone the past 5 years of experience, into under 10 hours. You know what I mean? Like I still learn as the deals come in, but I also know how to navigate those deals accordingly. So like you hit a hurdle every single time you do a new deal, but usually you've seen somewhat of a scenario like that before to solve the problem. Not every deal is straightforward. So like, it's literally like I would have to be side by side with you throughout every single one of your deals in order to give you that best, attempt to close that deal.
So you kind of just got to learn it by trial and error.
Like I said, I sent the same guy all my commercial mortgage business for 6 years plus and got 10% of a referral fee until I said, I'm ready to do this on my own, pull up my big boy pants and go out there and have the confidence to be able to do it. Yeah.
Okay.
So I appreciate you joining. Thanks for subscribing on YouTube. Appreciate it. All right. So if anybody has any other questions, feel free to ask. If not, we can close this up. I apologize for coming on 10 minutes late. Like I said, I had this closing here. So Renito, hopefully we'll see you again next week. And Tanya and Sherry, I hope you guys have a great day.
Sure thing. Thank you.
Bye, guys.
Bye-bye.